Hello and welcome to Sectors Up Close. I'm Vincent McAviney. Our focus today is on global hotel brands, and our guest is Randy Watts, the Chief Investment Officer at O'Neill Global Advisors. The hotel sector has had a turbulent start to the year. As Omicron faded at the end of 2021, hopes were high that demand for travel and leisure would snap back. But that sentiment was then hit by a triple whammy: the Ukraine war and sanctions against Russia, renewed coronavirus lockdowns in China, and an uncertain economic outlook in many Western economies. This is one ETF that tracks US-listed hotel groups, including Hilton and IHG, but also includes large casino operators. As you can see, it's a bumpy ride and is down about 10% since hitting a 52-week high in November of last year. So is this a time to be considering investing in these stocks? Let's ask Randy Watts from O'Neill Global Advisors. The funds he manages include Wyndham Hotels, IHG, and Hilton Garden Vacations. Randy, thank you very much for joining us today. I'm going to come to those companies in a moment, but first of all, the war in Ukraine, flight bans and general geopolitical tensions, how is that affecting the outlook given the uncertainty around how long all of this could last?
It is affecting it dramatically. I should say to start, thanks for having me. I think the most important factor is that 62% of American travelers are worried about the Ukraine war spreading in Europe and disrupting things there. As a result, we really think the focus is going to be on domestic USA travel. We think that's going to be very strong, and we think that's really where people want to be positioned from an investment standpoint. Right now, we expect Asia, because of COVID, and Europe, because of the war, to be slower this travel season, but for the US to be quite strong.
Coronavirus is still a risk, and business travel hasn't yet gone back to what it was, if it ever will now, with things like Zoom. And we've also got those lockdowns in China. So what's your view of the health of this sector over the coming year?
We expect business travel to continue to be muted, but it is starting to recover, especially in the US, where people are anxious to go out and meet with their customers and their suppliers. We think the driver of travel right now is really going to be the leisure travel. People have been really quarantined for essentially 2 years. They're anxious to get out there and have experiences. And we think that's going to lead to an increase of at least 10% in hotel revenue growth in the United States, both this year and next year. So domestically, we're actually quite bullish.
And in the economy, we've got higher wages, but also high inflation and high interest rates. So what is the impact of that on the sector and stock valuations?
That's a great question. We think that's the biggest risk to the hospitality sector. It's not demand, it's really supply. If you look at job openings for the hospitality sector, they're actually very close to an all-time high. In addition, wages are going up. So we are worried about the potential for that hurting margins. But right now what we're seeing is there's such demand from the traveler, the leisure traveler, that the hotel chains really have more price elasticity than they have in the past. And so therefore, they're actually able to raise rate and right now pass those higher wages on to the traveler.
And finally, just walk us through your picks. You've got Wyndham Hotels, IHG, and Hilton Garden Vacations. Why those?
So we really want to focus on companies that get the majority of their revenue from the US market. All three of these companies do. IHG obviously is one of the global leaders in hospitality. They've got brands like Holiday Inns, et cetera, here in the US. They've also got a very good pipeline of new development, both in the US and interestingly also in India. With regards to Wyndham, they're much more domestically focused. They get over 80% of their revenues from the US market. They're also expanding into extended stay. I should mention extended stay is an area that's done very well during the pandemic. Over the last couple of years, 43% of extended stay customers were new customers. People liked the environment, and we think that's going to continue after the pandemic. And then with regard to Hilton Garden Vacations, they're a timeshare company, and timeshare has actually also done well during the pandemic. And that's because it allows people to travel, but to still be essentially separate from other travelers, cook their own meals, et cetera, have their own temporary home. And so we think that's going to remain popular as well. Again, all of these companies are focused on the US for the majority of their revenues. If you look at the stocks, technically, they're all kind of in trading ranges. But we think as travel picks up this spring and summer, they're actually going to move out of those trading ranges and move higher. I would also note all three stocks have better relative strength than the overall US stock market. So we do think this is going to be a favorite area for investors over the next 12 months.
Randy Watts, CIO of O'Neill Global Advisors, thank you very much. Before I go, here are some of the stories in the travel and tourism space. The number of journeys taken in China over a recent 3-day holiday tumbled by nearly 2/3 over last year. This, according to state media citing data from the Transport Ministry. The decline was more than expected and comes as analysts warn the economic costs of China's zero-COVID policy are likely to soar, with tourism taking the biggest hit. Air travel alone fell 87% and was 54% lower than the spring of 2020, when China was coming out of its first wave. According to an estimate by Nomura, around 193 million people are currently subject to full or partial lockdowns in 23 cities across China. The world's biggest cruise operator, Carnival, reported its busiest booking week on record as leisure travel continues to rebound from a long COVID slump. Carnival said it experienced a double-digit increase in bookings last week over the week before. On March 30th, the US Centers for Disease Control removed its COVID-19 notice against cruise travel, roughly 2 years after introducing its warning scale for coronavirus transmission on cruise ships. Carnival said 22 of its 23 ships are now back in operation at its US ports. And finally, India's Kashmir region is attracting record tourists after the easing of pandemic restrictions and some improvement in the security situation. More than 340,000 tourists have come since January, despite restrictions on foreign tourists and some recent incidents of violence. Tourism plunged in Kashmir after Prime Minister Narendra Modi's administration stripped the region of its special status, and later as the COVID-19 pandemic crippled tourism. Kashmir is home to Dal Lake, which was a favourite centuries ago for Mughal emperors. The lake's famous houseboats are major attractions. And that is your roundup of the hotel sector. I'm Vincent McAviney, and this is Reuters.